I bought NVIDIA at around 181 euros. When I made this portfolio update, it was around 171, so my first NVIDIA buy was already red. Then I added 2000 euros to my portfolio, and this created a very tempting situation. NVIDIA was cheaper than my first buy, new money was available, and I had to decide how much risk I could add. Buying more after a stock falls can look smart on the screen, but it can also quietly turn one position into a problem. So in this video I'll show you the full update, the deposit, what I bought, how much NVIDIA became inside the portfolio, and what happened to my average price after the new purchase. So my first advice is simple: watch this video until the end, because small details can cost you money, especially when you are buying more of a stock that already went down. Hi, I'm DP and this is Durable Profit. I'm building a public portfolio from Europe. I invest in euros, I use European instruments, and I show my real deposits, buys, mistakes and portfolio updates. The structure is simple: 80% base, 20% ideas. The base part is the foundation: ETFs, short-term euro government bonds and gold. The ideas part is where I can buy individual companies and special opportunities, including stocks like NVIDIA. This rule helps me avoid a common mistake: putting too much money into the most exciting stock of the month. So whenever I add money, I ask one thing: does this purchase make the portfolio stronger? Because look, we are here to make money. Everything else is just poetry. Before this update, NVIDIA was already inside my ideas part. I bought it through its European euro listing, ticker NVD. The position was red because the market price was below my first purchase price. Before adding the new 2000 euros, NVIDIA was around 2.5% of the whole portfolio. Inside the ideas part, NVIDIA was around 12.5%. So it was already meaningful, but it was still small enough to think clearly. Before buying more, I wanted to answer two questions. Did the NVIDIA business still look strong enough? And could I add more without breaking the 80-20 structure? So I didn't start with the buy button, I started with the business. For me, NVIDIA is still one of the most important companies in AI infrastructure. AI needs chips, data centers, software, networking, and the full ecosystem around all of that. NVIDIA is not just another AI ticker, it sells core tools that many companies need to build and run AI systems. That is the part I still like. The risks are also clear. The stock is expensive, expectations are high, competition can grow, big customers can try to build more of their own chips. And the supply chain is still a serious risk, especially because the most advanced chips depend on a concentrated manufacturing system. So the lower price didn't make NVIDIA risk-free, but when I looked at the situation, I didn't see the business story breaking. To me, the fall looked more like market mood, valuation pressure, and investors becoming more careful with AI stocks. That is different from companies suddenly becoming weak. So NVIDIA still looked strong enough for my ideas part. After that, the real question was no longer just do I like NVIDIA. The real question was how much NVIDIA can this portfolio handle. After I added 2000 euros, the first decision was not NVIDIA. The first decision was how to split this new money between base and ideas. My strategy is 80% base and 20% ideas. So from this 2000 euros deposit, roughly 1600 had to go into the base part and roughly 400 could go into the ideas part. That is why I couldn't just look at NVIDIA and say the stock is cheaper, let's buy more. Before the deposit, NVIDIA was around 2.5% of the whole portfolio. After the deposit, before any new buys, NVIDIA became a smaller part of the total portfolio, around 2.2%. And if I apply the planned 80-20 split to the new deposit, NVIDIA was around 11% of the ideas part. So yes, the new money gave me some room, but most of this deposit still belonged to the base part. That is why the base purchases were the main part of this update. Only after that I could decide how much NVIDIA still made sense. Here is what I bought in the base part. I bought 4 shares of IWDA, it's my developed markets ETF and the core of the portfolio. It gives me exposure to companies in the United States, Europe, Japan, Canada, Australia and other developed markets. Then I bought 1 share of SPYM, it's my emerging markets ETF. It gives me exposure to countries like China, India, Taiwan, Brazil, Saudi Arabia and other emerging markets. This part can be more volatile, but if I invest globally, I don't want to ignore emerging markets. After that, I bought 4 shares of XSWC. It's my global small cap ETF. Small companies can be painful for long periods, but I still want some exposure beyond the largest companies in the world. Then I bought 11 shares of PRAB. It's my short-term euro government bond ETF. For me, it works as a stabilizer in euros and keeps part of the portfolio more defensive. And finally, I bought 2 shares of SGLD. It's my gold position. Gold doesn't produce earnings or build products, but I still want some protection from inflation risk, currency risk, political risk, and crisis risk. So the base purchases were 4 IWDA, 1 SPYM, 4 XSWC, 11 PRAB, and 2 SGLD. These base orders used around 1,625 euros before commissions. That is very close to the planned 1,600 base part from the new deposit. Now I could come back to NVIDIA with a cleaner mind. After the base part was handled, I looked again at NVIDIA. The business still looked strong enough for my thesis. The stock was still below my first average price, and the portfolio had room for a bit more risk. But I didn't want to turn a lower price into an excuse for a large emotional buy. That is a danger with averaging down. The average price goes lower and it feels like progress. But if the position size grows too fast, the portfolio can become weaker even while the average price looks better. So I looked at NVIDIA as a position inside ideas. I wanted the position to become more meaningful. I also wanted to keep enough cash for future opportunities. For example, if ASML stock becomes more interesting, I want the ability to study it as a possible ideas position. If NVIDIA falls more, I want options. And if the market gives me nothing attractive, I want the ability to wait. So inside the ideas part, I bought one more share of NVIDIA, again through the European Euro listing ticker NVD. After this update, I own 3 shares of NVIDIA. I bought the new share at 171 euros. After the purchase, my broker shows my average NVIDIA price at 179 euros including commissions. So yes, the average price improved. But that was not the main reason to buy. A bad investment doesn't become good just because the average price looks better. For me, the important number was position size. Before the deposit, NVIDIA was around 2.5% of the whole portfolio. After the deposit, before new buys, it was around 2.2%. After buying one more share, NVIDIA became around 3.3% of the whole portfolio. Inside the ideas part, NVIDIA was around 12.5% before the deposit. After applying the planned 80-20 split to the new deposit, it was around 11%. After the purchase, it became around 16.8% of ideas. That size makes more sense to me. NVIDIA is now more meaningful inside ideas, but it still doesn't control the portfolio. One extra share may sound small. In this portfolio, it was enough to change the position without changing the whole strategy. This is why I don't see this purchase as blind averaging down. Blind averaging down is when the stock falls and you keep buying mainly because you don't want to be wrong. Here, the lower price was only one part of the decision. I checked the business first, then I checked the size, then I checked the structure. The business still looked strong enough for my ideas part. The position grew from around 2.2% to around 3.3% of the whole portfolio after the new buy. And after all the purchases, the portfolio was still close to 80% base and 20% ideas. That is the difference. I used the lower price, but I kept the portfolio under control. The goal is to make the portfolio stronger over time, not just to repair a red position. Now let's look at the final portfolio after all purchases. This is the final result of the 2000 euros update. Cash went from 4,365 euros to 2,551 euros. The orders used around 1,796 euros before commissions. Around 1,625 euros went into the base part. 171 euros went into NVIDIA, and the rest stayed as cash. That is the full update, no more theory here. I like showing the portfolio publicly because it's useful when it shows the uncomfortable moments too. Not only green positions, also the red positions, new deposits, position size and the cash that stays unused. Because later it will be easy to look back and judge the decision. If NVIDIA falls more, this video will still be here. I don't want to rewrite the story after the result is already known. I want to show the decision while it's happening. And I want a system that should keep me from doing something stupid when the market gets emotional. Now I want to hear your opinion. Imagine you bought NVIDIA at around 181 euros and then the stock moved to around 171 euros. Would you add one small piece here or wait for a bigger fall? Write your answer in the comments. I want to see how other investors think about this situation. And if you want to follow this public portfolio from the beginning, subscribe and turn on notifications. I show every deposit, every buy, every mistake and every portfolio update. This is not financial advice. I'm not telling you what to buy or sell, I'm just showing what I do with my own money and how I think about risk. So I'll see you in the next video, if of course you subscribed and turned on notifications. Study investing, apply what you learn, gain experience and build your capital over time. And remember one important thing, we are here to make money, everything else is just poetry.